Cooperatives are ideal to serve marginalised sections of the community, and the number of reasons here: they are owned by the community, they're managed by the community, they provide tailored services to their members. Members have equal votes regardless of their levels of savings or their shareholding, and they prioritise the provision of services to members over profit. So the accountability is to members, and therefore the incentive is to try and get a high level of member satisfaction with the services rather than to shareholders. So it has an inbuilt mechanism balancing social responsibility with financial profit. We have a saying which is, we'll get this right, you need the numbers to support the philosophy, because if the numbers don't support the philosophy, the system will fail. So it's based on a very sound business model, but its rationale is its customer is the community, and its bottom line is cost recovery, but also serving the community. The impact of the programme is around the access to savings, access to credit, more credit, the development of business skills, the development of leadership and decision-making skills. We'll very typically see, if you visit Resaco members who've been members for maybe 10 years, they give a very impressive chronology of the development of their household economy, often from very rudimentary levels where they may or may not have small livestock, and the housing condition will be quite poor, through to developing a business and having a better house and creating opportunities through education and other needs for their children. This is other impacts: access to education, access subsequently as a result of having financial means, better health services, improved standard of living, improved gender equality, asset building, productive assets and other assets, and increased resilience to shocks, which is absolutely vital in this context.
And then another question came through about from Frank, which is what do you feel are the key lessons or initiatives that the social economy in Ireland can learn from your experience in Ethiopia?
From my perspective, this opens up a big area where we've come from a situation where our banks, without government support, they virtually all collapsed, whereas the credit union movement did not receive the same support and did not collapse. And there are a variety of reasons for that. They were more prudent in their lending, and also they had not taken the risks that banks had taken during that period. However, the credit union movement in Ireland is still very localised, and from my experience, not in Ethiopia but from other countries, I think that if the credit union movement, which I know is moving towards, can centralise a lot more of its functions, such as having internet banking that's systematized throughout the entire credit union movement, where people can go into one credit union and take out money from another credit union, where there's an ATM, where the credit unions are tied into the ATM network. I think there will be a big move from the bank to credit unions, because they're not as aggressively seeking profits, or their risk-taking profile is not the same.
Hello everyone, this is Yibeltal Asmare from Self-Help Africa, Ethiopia. Ethiopia is one of the lowest financial inclusion ratios of the countries in Sub-Saharan Africa, which is about 14% of the adults having access to private credits, which is far below the Sub-Saharan African average 24%, or the developing economy 77%, or the high-income economies 172%. So you can see how financial services are constrained in this country. So you can see how the rural areas are marginalized from the financial sector. For example, in the year 2005 to 2009, agriculture receives only about 9.6% of the total loan portfolio commercial banks provided to the market. Despite the huge impact of agriculture in the Ethiopian economy, even this amount wasn't given to smallholder farmers for direct production purpose, but this was given to big companies to facilitate agricultural import and exports. So we believe that saving and credit cooperatives or credit unions in the European context are the ideal institutions to serve this marginalized section of the community, especially the rural households. As a result, Self-Help Africa, in collaboration with the Irish League of Credit Union Foundation and Terafina Microfinance, established a Rusaco development program. This program was started in 2007, as a means for the sustainability of other integrated rural development projects, which was carried out by the organization. The project accomplished a number of activities since then, starting from the establishment of these community-owned microfinance institutions, staffing, training and technical assistance to the institutions, office building, equipment, even sharing the best experience of similar institutions from within and outside of the country. The overall goal of this project was, to increase wealth and food security for these smallholder farmers. It got three specific objectives. One is to improve the institutional and financial sustainability of these community-owned institutions. The second one is to improve support services provided by these institutions to their members. The other is to disseminate lessons, approach, and best practices for effective distribution of channels, whereby we shared the best experience from the Irish credit unions and other similar microfinance institutions in the world. Through this project, we support these rural communities to share experiences among themselves through learning forums. These institutions or communities, leaders of the rural finance or the microfinance institutions also, share their experience to the communities so that the communities can join these credit unions or microfinance institutions to satisfy their financial needs. They are also provided with training on the basic bookkeeping and accounting of the operations of this institution. So the project staff provided training to the bookkeepers of this community-owned institutions. The project also trained leaders or the management committees, elected committees of these institutions to build their management and governance skills. So, in addition to the financial services, this institution helped them, to identify and develop business skills to be engaged in different economic activities. As these institutions are managed by the communities themselves, people get the chance to develop leadership and decision-making skills because they are serving in this institution on a rotation basis. The other is they got access to education and other basic health services. Now these people have money in their saving accounts, even they can take loans for health emergencies or to education services for themselves or to send their kids to schools. It's also improved their living standards, improved gender equality. As I said earlier, this project is working mainly targeting women. So now we may get the chance, to build assets, to become the breadwinners of the family. So now their voice in the family affair decision making and even their leadership and engagement skill is improved. So this is altogether improving the gender equality in the area. It also helped them to build assets. Now people started, to build their own homes by fixed assets like land and even other working capital. So it helped them to build assets. It also helped them to being resilient to shocks. For example, if they feel a shock in the last agricultural season, now they are not obliged to or forced to sell their assets or whatever properties they have. Now they can get credit from their credit unions or microfinance institutions, so that they can be resilient to those current shocks and transfer that to the next agricultural season. To come up with a conclusion, so we can see that creating access to financial services or microfinance is a good way to sustainable development of low-income or smaller rural communities, because this helps to success every development efforts on a sustainable basis. Secondly, apart from the financial services, community-owned financial institutions or microfinance institutions help members to improve their leadership and decision-making skills, especially for women. In the past, women wasn't involved in any leadership or any community leadership issues, but now they got the skill and the technique on how to make decisions and lead community-based institutions like microfinance institutions. The other one is also access to microfinance creates access to other basic services that improves the livelihoods of members and their families even. As a result of that, they accumulated, now their children are going to school, getting basic services like health, water, education. So microfinance services are providing all these issues and improving the lives of people.